if FMCG companies would have tailwinds, what the headwinds that the auto companies will face will be quite stellar. It's been a dull December for most automakers. Monthly sales for some of the country's largest players have fallen even below estimates, which are anyways weak, be it the country's biggest car maker or agri-equipment manufacturer or Royal Enfield. It's been a hard landing for all of these players. Yatin's put together the numbers into perspective. And Yatin, is it a worrying trend?
Worrying trend, probably yes, Neeraj, given the fact that December, a lot of these auto companies pushed auto sales in terms of festive offers, in terms of, record discounts. And despite those record discounts, the December numbers have been the lowest for 2018. So be it Maruti Suzuki, Royal Enfield, Tata Motors, both the commercial vehicle segment plus the passenger vehicle segment, or, other companies like Mahindra and Mahindra, the agri-equipment segment, we have seen the sales for 2018 come in at a low. So clearly, if you look at the trend which will come up on the screen, is quite worrying, because if you look at the Royal Enfield, the numbers came in post market hours yesterday, and look at this, from almost an average of 20-30% kind of a growth range, the decline is quite sharp. So we have come off in the festive season. So typically, September is the start of the festive season, with Dussehra coming in. October is the month of Diwali. November is when we had the bulk of festive seasons coming in, and we have seen a sharp decline coming in despite those healthy order books, which clearly says that either there are cancellation of bookings, either the demand is satisfied, or probably there is no demand at all. So Royal Enfield, across the board, if you look at Motilal Oswal, if you look at SBI Cap Securities, everybody has cut the EPS estimates by at least 5%. So 5 to 6% is the kind of EPS cut that we are talking about. Now, this is the 350cc plus sales segment. This is the premium segment of Royal Enfield, wherein the growth again has been flattish. So, this chart does indicate that the numbers for the 350 plus cc category remain stable. However, their bread and butter business, the bulk business, which is the motorcycles which are less than 350cc power, there is where the real action is, there where the real decline has happened. So clearly, it could be Java effect, it could be genuine demand distress, but too early to say about all of that. But the numbers for December speak for themselves, clearly indicating that there is pressure point in the marketplace. Similar is the case with Maruti Suzuki, and this time, Neeraj, we not only had the mini segment declining in double digits, but the compact segment, which is basically the Baleno. If you look at the UV segment, we have the Brezza, we have Ertiga. There also we have seen decline coming in. So this is probably a month wherein we have seen a flattish kind of a growth trend. For the last 3 months, the growth trend has been flattish. But if you look at it from December's perspective, clearly it has been the lowest number in the last 12 months or so in terms of the absolute figures for Maruti Suzuki. Coming to Mahindra and Mahindra tractor sales, and what a volatile last 2-3 months have been for the company, from again a high growth in the start of the year, from probably a double-digit growth in the remainder of the year. But if you look at the last 1 or 2 months, clearly there has been a pressure point. In fact, we have seen a 6% decline coming in for the month of December, and it's not only the domestic market for the agri-equipment segment, but also the export markets which have taken a hit. So the trend is quite visible for Enfield, for Maruti Suzuki, for Mahindra and Mahindra tractors. The sales decline has been quite sharp, and similar is the case with Tata Motors. Again, their average growth rate for the last 12 months was almost 35% for the passenger vehicle segment. That has come flat on a year-on-year basis for this month. And if you look at the aggregate number, which is the passenger vehicle segment plus the commercial vehicle segment, a steep 8% decline. And look at the growth from the start of the year. The base was low, 30, 40, 50% kind of a growth rate. And clearly in the last 2 months, post the festive season, we have seen a 4% decline in the month of December, for the month of November, and 8% decline for the month of December. So clearly November and December have not been great for a company like Tata Motors, and the trend clearly is visible that there is pressure in the domestic market.
Well, the going just gets tougher for a bunch of these auto names. The question mark only is, can Jan, Feb and March revive that? If FADA was to be believed, maybe the inventory levels have declined and the pickup could happen. But as Yatin said, the numbers don't lie and they tell you a story which is not looking all that pretty.